G'day, it's Justin Hogg here from RightSource, talking things accounting and giving you an understanding of what you can use your financial statements for and why we make them. So today we're going to talk about the cash flow statement, probably one of the least utilized financial reports that businesses have access to in the simplest accounting packages like Xero right through the major ERPs. So it is basically in high level, it's the cash movements that happen in your business. Now, this is better in some respects than your profit and loss because it does reflect cash, which is more real. Profit and loss can be a little more, it's still reflecting how profitable your business is, but it doesn't always necessarily mean you spent the money or if you've received the money. Cash flow tells you this is what's happened in your bank account and why your bank account has gone up or why your bank account has gone down. So let's dive in and have a look through how a cash flow statement is made up. And what we're going to talk through today is specifically a direct cash flow statement. The first aspect of a direct cash flow statement, as you'll see, is your operating cash flow. Now, operating cash flow reflects the cash that you've received or spent on revenue in your business or expenses. So that's it. So it's about what's gone out of your business in terms of stationery, inventory, paying for fuel, paying for wages, all the cash that's gone out, and also all the cash that's come in for services that you've provided that have actually been paid for. And so this is why operating cash flow is a very important metric when I'm looking at a business, because if that's a positive cash flow, that shows that your business is generating money, which is fundamentally one of the most important things in business, is to know that your business, your core operations are generating money. Now, you will also see other items in your operating cash flow, which will be often tax, potentially interest revenue. Those amounts obviously are relating to the operations of your business, so they form part of the expense. Sometimes they're broken out, sometimes they're included just revenue and expense cash flow, and that's fine. If your operating cash flow is all about your revenue and expenses, why does it equal your profit and loss? That is what we can use another type of cash flow statement to help explain, in that because your profit and loss will have non-cash items going through it. And this makes more sense if you look at an indirect cash flow, which will be a video we'll do next week. So if you want to get a deeper understanding as to why your operating cash doesn't equal profit and loss, stay tuned and check out next week's video. Otherwise, let's keep going through the cash flow. So the operating cash flow is sort of representative of your profit and loss, your operations. The next parts in your cash flow, and this is why I find this really important, these things don't pop up in your profit and loss. Even really, you don't really see them in your balance sheet either. So the first one is your cash flow from, well, your next one, sorry, is your cash flow from investing activities. Now, this is where you spend money or receive money relating to assets in your business. So if you need to buy a car, if you sell a car, and I'm not talking selling a car in terms of your operations, if you have assets in your business that you sell, so say you have an office building that you own and you sell that, cash will come into your business. You will see that cash that comes in through your cash flow statement. And this allows you to understand how much it's costing you in terms of cash to maintain the assets of your business. So you might not see a whole lot of entries or lines in the investment, cash flow from investments area, but it's quite important to understand, well, this gives you an idea of what you're spending on the business to grow the assets that you have in your business. The next part, the last section in your cash flow, is your financing activity. So this is where you get cash in or to the business to allow you to fund the operations of the business. So that could be from yourself as an owner contributing cash into the business, or it could be from debt financing where you're getting a loan to bring cash into the business. It can also show where you're paying dividends out or repaying that financing. So this again is another aspect of your business in terms of how you're financing it, and the cash flow shows you the impact of these financing activities are having on your cash balance. Now, in looking at all three of these things together, you'll understand how profitable your business is, how much you're spending on maintaining your assets, and then how much you're needing in terms of financing to support that process. And each one of those is important in its own right, but together they give you an indication of why your cash at bank, your cash balance, has moved from one figure to another figure over a period of time, and that then informs you on how your business overall is running. So that, in a nutshell, is what a cash flow statement's all about. If you'd like to see more information on how the accounting world works and what your accounting is trying to do for your business, there's some more videos you can check out on the YouTube channel. If you'd like some templates that you might be able to use in your business, you can definitely access them through the YouTube channel and some links on there. Otherwise, feel free to subscribe. Until next time, we'll be talking about some more accounting stuff. I look forward to joining you then. It's Justin Hogg from RightSource.